The main focus this week has been the geopolitical headlines, mainly with the US and Iran nuclear talks, but we've also seen some mixed headlines coming from Russia and the Ukraine war. So we're going to do a recap of the price action from the opening of price this week. And we're also going to break down what happened today with the NFP, and that way we can move forward a lot more prepared. So like I just mentioned, we've seen more geopolitical headlines this week. Again, a lot of uncertainty in the Middle East with the US and Iran. So right now, gold, as we can see, is still very much being influenced by that idea based off what we see from a technical perspective. We can see higher highs and higher lows being created very clearly on this 1 hour. So I know I already have all these zones listed out, but I wanted to just have them there so that way we can just go over the recap and we'll adjust some zones as we move on to the analysis for today. So let's just get over this part really quickly here. So again, from a technical perspective, very clearly bullish structure, price making those continuous highs without breaking those major structure points at the lows. So it was being respected really well. It wasn't like very aggressive. Let's say like how it was at the end of last week on this Thursday. Very, very aggressive price action here. We can see it was strong, but then like on the days where, let's say for example, more towards Asia session on Monday is where we started to slow down. Going into Tuesday, again, just price sort of stuck in between this range, but it wasn't until after breaking out of here that we started to see once again another strong push towards the upside. Now we can see price ended up bouncing from the support, and we ended up climbing into this high around the 5100s. We're going to call it 5120s, where price sort of peaked, where then we saw this strong sell-off. Now this is where we can use market to our advantage, and we're going to go over to the news feed here, and we're going to go around 8:30 in the morning, which was around the time that NFP was released. So at 8:30 in the morning, we saw NFP being released. We saw a more optimistic report. And so therefore we understood that at that moment, dollar could be more bullish and gold can start to get pressured. So if we look at the price action on gold, we see just that. We see that around 8 in the morning is where we saw these strong pushes towards the downside. If we zoom into the lower time frames and we go to 8:30 in the morning precisely, which was right here, 8:30 in the morning today is where we saw this strong sell-off from around this 5080s area. So the 5080s area then became an area where sellers pushed price very aggressively. We can see that multiple times from price doing it around the 5080s. Right at this area right here, we had a push towards the downside of about 350 pips. Then this push was more than 700 pips. This push that we saw here, getting close to the 5080s. It got to the 5075s, 5080s basically. Again, another 700 pip push towards the downside. What did we see today from this area? Again, this was a little bit different because it was fundamentally induced, but it's still the same area. It was precisely the 5080s. We had about another 650 pip push towards the downside, with continuous rejections throughout the New York session. We saw 1, 2 strong rejections, and again, over 500 pips each time worth of a push until buyers stepped in, and now we're in this area right here. So again, we can understand very clearly now why gold had that sudden reaction towards the downside and why we were more on the bearish side, in my opinion, throughout New York. Even though, again, we saw very strong pushes towards the upside, which we'll explain ourselves in just a second, the sellers were very aggressive from that 5080s area. So 5080s, we're going to remember that because that zone we're going to use, or we'll probably update the zone. But again, it's going to be around that same area. Even today, like look at today during market open. Market opened with a gap towards the upside and literally sold off from just around those areas. It was around the 5090s that we saw sellers stepping in aggressively, and then price, as we can see, pushed towards this area of support right here. So now when we're looking at price action, although we're seeing very strong moves towards the upside, towards the downside, again, we see the sellers stepping in aggressively, we see buyers stepping in aggressively. It's in my opinion a bit choppy, right? Because we're not seeing trending markets. This, in my opinion, is what markets look like when they're trending. This is what it looks like on the lower time frames. Again, you can see it very clearly. Highs, lows, highs, lows. The concepts are the same on all time frames. It's just each time frame has more significance, right? The higher the time frame, the more significance that holds. But again, we can still see it very clearly on the lower time frames when price is trending. We can see when price is sort of very choppy, stuck in between consolidation ranges versus when it's trending, highs, lows, and then we see vice versa, right? We can see that all throughout the chart, multiple or a lot of examples of price trending to the downside, trending towards the upside. If we look at the current market we're in right now, it's sort of choppy. Why? Because we see bounces from lows and highs, and right now the price is not really breaking and trending towards the downside or the upside. If we keep scrolling, we're going to see headlines about tariffs. This is more on the de-escalation side as well as on China and Canada. So again, you see attacks in Ukraine at the same time that you're seeing de-escalations being made on the tariff side with China and Canada. At the same time that you see US airspace being breached by the Mexican cartel. At the same time that you have dollar rallying because of the strong jobs data, right? So again, you have a ton of conflicting data going against each other. And so we look at gold and we can see very clearly why it's acting the way that it's acting right now. Very choppy, failing to really break towards the highs or towards the lows. We couldn't even break or really close below the 50-55s. So unless we're trading below this area, and closing below that area, I wouldn't be too worried about seeing any more sellers in the market. So we can easily mark that off as an area where we could be on the lookout for sells, again, below this area. If we cannot even break below that area, we know that right now the market is mainly focusing on those geopolitical headlines, and we're just going to see continued buy plays from these lows, the 50-55s, which is this area of support right here. And if we adjust this area right here, just around these highs, this would be the first target to be on the lookout for. And then we have more highs around the 5120s, where if we can break above this area, then we have further room to continue pushing towards the upside. Another zone I'm seeing here on the intraday time frames is the 50-75s, more or less around this area, where again we can right now stay within this range. It's a fairly large range. It's about 200 pips worth of a range. So if we can again continue to reject this zone, I would continue to stay technically bullish on gold. But if we break below that area, watch out for deeper pullbacks at least into these lows here, and then watch to extend that bias just below that area into these previous lows right here.